Onto your markets news now. Asian stocks fluctuated throughout the day, ultimately ending the session mixed. Traders are keenly awaiting U.S. inflation data to give more clues around what the U.S. Fed's next move might be. While the Chinese markets ended in positive territory, concerns remain about that economy's fortunes, with authorities being encouraged to inject further stimulus in that market. The Nikkei share average ended the session down 0.16%. The Hang Seng Index rose by 0.22%. While the Shanghai Composite Index ended the day up 0.28%. Well, yesterday, U.S. markets reversed some of the declines they incurred last week Friday. While they didn't recover fully, tech stocks also contributed to the gains. Market players are now said to be looking out for the upcoming consumer and producer price inflation data due out of the United States this week, as they continue to obsess around the extent to which the U.S. Fed will cut rates. The Dow Jones Industrial Average closed up 1.2%. The S&P 500 rose by 1.17%, while the Nasdaq Composite Index ended the session up 1.16%. The all-shares is slightly higher, with the all-share index up 0.1% at 81,545 points. The rand is trading at 17.89 vis-a-vis the US dollar, 23.46 against the British pound and 19.75 against the euro. Gold is trading at $2,505 an ounce, while platinum is trading at $946 an ounce. Brent crude oil is trading at $70.82 a barrel. Well, to unpack the markets for us, I'm joined by Makwe Masilela. He's from Makwe Fund Managers. A very good afternoon, Makwe. So all eyes pretty much on the last US data items on inflation to come out ahead of the Fed making a call on interest rates next week. What's the thinking?
You know, the thinking is the call is a given that we expect a cut. The question here is the magnitude, whether we're going to get a 25 or 50 basis points cut. But I've seen that almost 70% of the market participants are expecting a 25 basis point cut. So, but should that be a nice surprise and maybe the inflation numbers tell us something that probably we have to get a bigger number, then that will be a nice surprise for the markets. But remember as well, you've got the issue that these guys are behind the curve. If we've seen that we're trying to balance between a recession and a possible soft landing, as we've seen that the labor markets in the US has been cooling off. So, of course, data moves markets. We do have the manufacturing data coming out, or it came out at 1 o'clock. I haven't had sight of it. If you have had sight of it, you can speak to it. But what's moving local markets at the moment? Generally, is the global sentiment what is happening, because remember, other than the inflation numbers expected today, political risk is now back into the fore when it comes to the US, as we have that presidential candidates debate tonight. And also we've got the European Central Bank interest rate decision come Thursday. And after the US interest rate decision next week, Wednesday, then will be followed by our interest rate decision as well. So markets continue to be cautious, even though we continue to be hopeful that things will turn out more positive more than anything else. Is it an automatic that the Reserve Bank will cut interest rates for us next Thursday? Unfortunately, they voted this guy, so it's very difficult to tell. But given what has been happening, inflation at 4.6%, which is almost near their midpoint where they like to see it when it comes to inflation expectation, to maintain the interest rate differential between the rand and the US dollar, that's if the US, they have to cut come next week or Wednesday, then most probably the guys might as well follow suit and cut. We've seen the likes of the European Central Bank have been cutting so far, Canada, Switzerland. So I think the whole issue here, our mandate, it's a single mandate, is to fight inflation when it comes to the central bank. And so far, inflation has been going down. Petrol prices continue to go down as well. That bodes well for inflation. So food producers have been coming out with their results. Yesterday it was AVI. Today is the producers of Lancewood cheese, Denny, Cape Herb and Spice, that is Libstar. They released their half-year results ended June 2024, reporting total revenue up 5.2%, diluted headline earnings per share up 32.4%. Pretty much saying that they managed to push through some price increases, but demand remains a problem. Your thoughts on their report? You are right, and the guys were lifted mainly by the strong performance that have been coming out of their ambit products, that is your snacks, now you're baking and spread, stuff like that. But look into the volumes, which is a confirmation that consumers continue to struggle, and the guys could only manage to make money because they've managed to increase prices here and there, as we've seen that selling inflation has been decent, and also when it comes to the mix, that they had to change it. But you look into the demand, the volumes were marginally down 0.2%, but fortunately when it comes to industrial and export channels, those sales improved. And as well, when it comes to load shedding, they managed to reduce the cost there by almost 71% to 13 million. But unfortunately, electricity cost went up, and those costs were up almost by 14 million. So that at least was a negative. But it is clearly seen that only those who are able to increase prices here and there are still able to make something decent. But the volumes is something else, as we've just said, that their volumes declined by 0.2%.
Yeah. So late yesterday, just before the markets closed, Capitec came out with a trading statement advising the market that they expect their headline earnings per share to increase by between 35 and 37% for the 6 months ended August 2024. This is, of course, higher than what they anticipated last month. Why are they doing so well, do you think?
Because when it comes to the credit impairments or credit losses, they've improved. And why they've managed to improve the credit losses is because they've tightened their lending criteria. And also when it comes to non-lending income, we've seen some improvement from value-added services, from commission end. So that as well bodes well for the earnings going forward. As we'll expect that if interest rates have to go down, then the net interest income will start to be reduced.
Thanks very much, Makwe, for your time and insights. As always, that was Makwe Masilela from Makwe Fund Managers.